Hello friends. Friends, in this lecture I am going to share with you the few queries that I have been receiving. So I decided that I will share those topics again with you. I will explain those topics briefly. Okay. So what are the queries that I have received? One regarding the revaluation account. Right? Revaluation account in partnership, whether it is admission, whether it is retirement or death, we have to prepare revaluation account. Right? Now, putting it in simple terms, you have to understand one thing, that we do revaluation for two things. One for assets, right? And the second for liabilities. So revaluation is done for these two things. One is assets and one is liabilities. You all know how to prepare the balance sheet. So first you have to identify whether an item is an asset or whether an item is a liability. Accordingly, we will deal in the revaluation account. Right? So the first step is identify whether it is an asset or a liability. Now, if it is an asset, I say it is an asset and there is an increase in the value of an asset. If there is an increase or decrease in the value of an asset or liability, only then there is a role of revaluation account. What is revaluation? That means we are putting some other value that is other than what is appearing in our books. Right? We are revaluing our assets and liabilities according to the market value on the date of admission or retirement or death or change in profit sharing ratio. Right? Understand? So, if there is an increase in the value of an asset, can you tell me whether the asset account will be debited or credited? If there is an increase in the value of an asset, what does the rule say? Accounting rule. Debit what comes in and credit was what goes out. If there is an increase in the value of an asset, that means our asset is coming in, right? Our asset is coming in and the rule says debit what comes in and credit what goes out. Now if there is an increase in the value of an asset, that means there is an increase in your asset. That means the asset is coming in. What you will do? You will debit the asset. You will say asset account debit, and which account you will credit? You will simply credit revaluation account. Clear? You will simply credit revaluation account. Now, talking of liabilities. What is a liability? That is the amount that we have to pay. Amount that we have to pay. It is a liability. Liability is always credited, isn't it? Liability is always credited. Now, if there is an increase in the value of a liability, what you will do? There is an increase in the value of a liability. The liability will be credited. You will say to liability. And which account will be debited? You will debit revaluation account. Clear? If there is an increase in the value of an asset, that means the asset is coming in and the rule says debit what comes in, credit what goes out. Asset is always debit. Right? So, if there is an increase in the value of an asset, our entry will be asset account debit to revaluation account. If there is a decrease in the value of an asset, then the entry will be reversed. Entry will be revaluation to asset. Now, talking of liabilities, if there is an increase in the liabilities are always credited, right? And which account will be debited? Revaluation account. Now, if it is the reverse, that means if there is a decrease in the liability, the entry will be reversed. Liability will be debited and revaluation will be credited. Clear? Now, if I specifically talk of one item, that is provision for doubtful debts. Right? Now this provision is created on debtors, as you all know. Debtors is what? Asset. If you remember the balance sheet, try to recall the balance sheet. Right? This is our asset side and this is our liability side. Here you have debtors, say 50,000, and out of this you have created a provision for doubtful debts, say 5,000. Now your debtors will reflect at 45,000. Why we are creating this provision? We are creating this provision to meet any future liability. That in what we are considering is that in future, if some of our debtors do not pay us the money, then we have this provision created. We will use this money to compensate the loss. Clear? So see, what is the effect of this provision for doubtful debts? This provision of doubtful debts is reducing our assets. This provision for doubtful debt is reducing your asset. You can write this provision for doubtful debt here also. Provision for doubtful debts 5,000. Here your debtors will reflect at 50,000. You can show this way also in the balance sheet. Now what is happening here? Your liability is increasing, or alternatively I can say the provision for doubtful debts is reducing your asset and increasing your liability. Then what is the journal entry for that? If there is an increase in the value of your liability, if there is an increase in provision for doubtful debts, if you are creating provision or you are increasing the amount of provision, that means you are increasing your liability. And if there is an increase in the liability, what is the journal entry? Revaluation to liability. How will you show it in the revaluation account? In the revaluation account, you will show it as to provision for doubtful debts 5,000. Right? You will show this provision only if you are creating a new provision or if there is an increase in the provision for doubtful debts. Only then it will reflect in the revaluation account. That means in two situations, one is creating new provision, second is increasing old provision, increasing amount of old provision. If there is a decrease in the amount of old provision, then the entry will be reversed. Then you will write provision here. Right? So first of all, you have to identify whether an item is an asset or a liability. Right? Then you have to find out whether there is an increase in the value of an asset or increase in the value of a liability, or there is a decrease in the value of an asset or decrease in value of liability. So you have to identify first the asset or liability, then whether there is an increase or decrease. Right? Accordingly you will treat it. Here provision for doubtful debts, when you are creating provision or you are increasing the amount of provision, this provision is your liability. This provision is you are creating for future liability. So it is a liability today only. Right? It is reducing your value of an asset and it is increasing your liability. So the journal entry will be revaluation account debit to provision for doubtful debts. Clear? So this is how you are going to treat provision for doubtful debts. Clear, friends? Now, one more thing, that is undervaluation and overvaluation of assets. Now, what is this undervaluation and overvaluation of assets and how to treat this? Suppose you have an asset, plant and machinery in your balance sheet for rupees 1 lakh. Right? Now, when you go to this is book value. This is book value. Now, when you go to the market to find out the price of this plant and machinery in the market, you realized that its price is 1,20,000. When you go to the market to identify what is the price of this machinery, you got to know that in the market this machinery is available at 1,20,000, whereas in the books you have 1 lakh. That means you have undervalued your plant and machinery. This is undervaluation. This is undervaluation of your plant and machinery by 20,000 rupees. You will have to increase the value, increase plant and machinery. What is plant and machinery? Asset. So if you have to increase your asset, what will be the journal entry? Plant and machinery account debit to revaluation account. Clear? Right? Undervaluation is when you have valued your assets less than their market value. Right? When in the books you have valued your assets at a price which is less than their value in the market. That is undervaluation. Now, talking of overvaluation, it is completely the contrast of this. You have plant and machinery whose book value is 1,50,000, and if you go to the market to find out its market value is 1 lakh only. That means you have in your books an overvaluation of rupees 50,000. If you go in the market, you will fetch only 1 lakh from this plant and machinery. That means there is an overvaluation of this machinery to the extent of 50,000. Overvaluation. Right? Compare the book value with the market value. If book value is more than the market value, it is overvaluation. And if the market value is more than book value, that is undervaluation. In this case, what you will have to do, you will have to reduce your value of plant and machinery. That is, you have to reduce your asset. Then what will be the entry in this case? Revaluation account debit to plant and machinery account. Clear, friends? So this is about undervaluation and overvaluation of assets. I hope this revaluation concept is again refreshed. It is clear now, right? Why we are creating revaluation and how to deal with this. I told you two very simple steps. First of all, identify whether it is an asset or a liability, right? The first step is identify whether it is an asset or a liability. Then identify the increase or decrease in asset or liability, right? Then you have these rules. If there is an increase, then what is the journal entry? If there is a decrease, then what is the journal entry? Accordingly, you can prepare your revaluation account. Clear, friends? So these were some specific topics, right, that I wanted to cover because I received some specific queries regarding this, right? So if you have any other queries, just keep sending me email at ksjteaching@gmail.com. Right? Clear, friends? So thank you so much, friends.